we're really at that blow off top. The good news is, okay, everything will go higher. The bad news is that whenever it, peaks, that we're likely then to go into bear mode for some time. The good news here, I think, is that for hard money advocates, what's going on in the real world out there, and if you're patient, you stay the trades, you buy low, sell high, you can do that repeatedly and make a bunch of money. If you're not in the money-making phase of your life, you're in the wealth preservation phase of your life, then, don't lose the faith, brothers and sisters. Your real money is what it is, and we all know, whatever the Fed may or may not do, those 25 basis points or not, that's not even icing on the cake. That's just superfluous almost. Small-time noise.
Silver has surged into the spotlight again, carving out one of its strongest multi-month performances in over a decade and finally grabbing mainstream attention, just as gold pushes toward a new structural trading range near historic highs. But while most commentators are celebrating, Lobo Tiggre, one of the most respected fundamental analysts in the precious metals space, is offering a far more sobering read. Not bearish, not pessimistic, but brutally realistic. For years, Lobo has been one of the few voices who consistently warned that silver's bull markets are emotionally charged, violently cyclical, and often dangerous at the top. And today, he's saying something few silver bulls want to hear. The metal may need to cool off. Not crash, not collapse, but simply breathe. A pullback into the high 50s, even a temporary shock to $50, wouldn't be a disaster. In Lobo's view, it would be the reset that strengthens the next leg higher, because miners would still be minting cash. Physical demand would rebalance, and long-term investors would get the kind of entry points that never stay open for long. But here's the twist. The very reason silver might cool is also why it still has so much room to run. This market is being driven not just by Western investment flows, but by global structural forces, Indian demand, tariff arbitrage, critical minerals reshuffling, and tightening physical supply pipelines. When those forces pause, the market consolidates. When they resume, it launches. And that's why Lobo's perspective matters right now. He isn't calling a top. He's warning that if silver does what late-stage bull markets usually do, go vertical, then the blow-off could come faster than anyone expects. The end of a bull market feels good on the way up, right until it doesn't. So in today's video, we're diving straight into Lobo's most candid analysis yet. Why a temporary silver cooldown could be the most bullish scenario, why the next consolidation matters more than the headlines, and whether the metals are setting up for years of upside, or for one last vertical rush before a long grinding bear. Let's jump into the clip. And if you find this kind of grounded, analytical breakdown valuable, make sure you like this video, subscribe, and share it with someone who needs a more realistic take on the metals markets. We appreciate the support and hope you enjoy the video.
It's kind of fun when, gold was breaking out and breaking out and breaking out. We had lots of gold headlines, and we talked about how that might bring more generalist investors in. It's sort of fun, but also a little bit scary to see silver headlines on CNBC or Bloomberg. There was a video that went around a couple days ago about, will silver head higher? And it wasn't silver or gold bugs. It was one of these mainstream media outlets. I forget which one. But the funny thing was it didn't tell us anything new, anything we hadn't heard already about the shortage in London of physical and people flying silver around, all that sort of stuff that we've talked about for weeks now. So, but people got all excited and people want to know, what do I think about this video and so on? Well, I think they're telling us what we already know. But to answer the question, I think I have two minds on this. On the one hand, I'm long, and despite people calling me Darth Silver and all these things, I own plenty of silver stocks. I'm very happy to see it long. I've never been a bear, but I have to say I'm not sure I really want to see silver catching up with gold, because even your most diehard silver bulls will tell you that silver lags gold at first in a bull market and then more than catches up at the end. It's not the catching up part I have a problem with. It's the end part I have a problem with. My analysis is not technical, it's fundamental, and I don't see any reason for this bull market to end anytime soon. That's like saying the money printing is going to end soon. It just never happens. That said, the bull markets do end despite the money printing. So What I'm saying is, if silver bulls are saying this is it, silver's finally going to have its day in the sun, it's going to have more, it's going to beat gold. Be careful what you wish for, because if that's what happens, it means the end of this bull market is nigh.
What do you anticipate if this isn't the end of the bull market within the next few months, maybe year? What do you anticipate for the metals going forward here?
I'm bullish on anything real that governments can't print. I'm particularly bullish on monetary metals, safe haven assets. If you, dear audience, think that the AI valuations in the market are a bubble, that bubble pops, I think that would create a lot of demand for safe haven assets. As we all know, if the market actually crashes, I'm not just talking, rolling over and politely, slumping down to more reasonable valuations. If there's an actual crash, everything gets whacked, absolutely everything, including gold at first during that initial liquidity crunch, and then it goes soaring. If that happened for anybody who gets it, that could actually be an absolute gift on the part of the market. That sphincter's opening moment, like in 2020 or 2008. I wasn't in the market in 1987, but I understand it was a similar thing, right? The wrong things go on sale, and that is an absolute, the best times you could have bought gold in my career, or during the crash of 2008 and the flash crash of 2020. Both of those saw screaming rebounds afterwards. So we might see something like that if the AI bubble bursts. And if not, broadly speaking, I think the writing is on the wall of the inflationary agenda in the United States. Even if you agree with Trump, the Doge did not save us $2 trillion. The tariffs are being walked back and negotiated down. So I think the agenda is highly inflationary. Europe's rearmament is highly inflationary. Russia's war is highly inflationary. Even China, at long last, has finally got some consumer price inflation going again. So, that's bullish for monetary metals. And then to sort of the not just the geopolitical risk, but the awareness of how rickety the financial house of cards has gotten. I think, I can't prove this, but I think it has a lot of mainstream investors, deep-pocketed, not just institutions, but individuals, family offices, that sort of thing, saying, maybe I should hedge with a bit of gold and maybe some silver too. So all of this is very bullish, whatever happens long term. And I feel a bit odd saying this when we're at or near record prices in gold and silver, but there's actually not a very strong case for gold going down. The strongest case we could have made recently was, gold went screaming up to 4,400. That was too fast, and it has to be a correction. And then the question was, would that be a peak, or would it be a plateau to another high later? And I wanted it to be a plateau, but Mr. Market doesn't care what I want, right? So we had to see. And I think it's pretty evident right now. It certainly wasn't this kind of peak. It wasn't a 1980 intraday type peak. It looks like 4,000 is the new 3,000, and we're consolidating before moving higher. So overall, bullish all around. It's a crazy thing for me to say at these levels, but that's the way I see it. And sorry, let me come back to the point of your question. If I'm bullish on gold and I'm bullish on anything real, how can I not be bullish on silver, right? That having been said, if I'm right in my fundamental analysis and that we still have a long way to go with this market, then that argues for actually silver cooling off a bit here. Maybe it kisses 60, that sparks some profit taking, and it cascades a bit.
Lobo is reminding the audience that silver's personality in a bull market is extreme. It lags gold early, it sprints at the end, and when it sprints, the run is spectacular precisely because it often signals the terminal stage of the cycle. His caution isn't bearish, it's strategic. He wants the bull market to continue, and the last thing he wants is for silver to explode too early, too quickly. A silver surge that closes the gap with gold right now would bring in momentum chasers, not long-term conviction buyers. And history shows those late entrants usually mark the beginning of the end. However, if we assume, like Lobo does, that the structural drivers remain intact, the picture becomes far more promising. Global liquidity is still expanding. The inflationary agenda in the US, Europe, and Asia is accelerating, not cooling. Geopolitical fragmentation has pushed the world toward real, tangible wealth rather than paper promises. And the very institutions that mocked precious metals 5 years ago are quietly hedging with gold and increasingly silver. In other words, the foundation for a multi-year advance remains in place. Let's get back to the interview.
If silver crashes all the way down to 50, the silver miners will still be printing money, like literally pulling money out of the ground, real money. So I don't think that would be a disaster at all. I think to the degree that something like that put the silver stocks on sale, again, that would be an opportunity. And what might make that happen, if it's true that, demand out of India is and front running of tariffs and critical minerals rebalancing, this sort of thing, has put a squeeze on the physical markets, I think that rebalances. Again, I'm not a bear here. I'm not arguing against silver, but I think that would be a good thing. That would set the stage again for consolidation before moving higher. And if that's not what happens, if we're really at that blow off top, the good news is, okay, everything will go higher. The bad news is that whenever it, peaks, that we're likely then to go into bear mode for some time. So yeah, again, Mr. Market doesn't care what I want. I would prefer it wasn't the blow off top just yet. But if it is, if we start seeing things going parabolic again and gold confirms silver's move, then actually I would deploy more cash. As crazy as it sounds to say, yeah, I'm going to jump on all-time highs, if we're looking at that blow off top, then yes, I would put more money to work trying to profit on that. And I mean in the stocks. Bullion, I always buy on the dips. That's my savings. I'm always willing to accumulate bullion. That's not what I'm talking about. I'm talking about, speculating for hockey stick gains on the stocks. If people ask me, well, how high can gold go? I always answer, well, how long can governments keep printing money? Where is the end of that process? So if you're not worried about the shorter term fluctuations, and by the way, if you bought the very peak, like if you just had the bad luck to jump on the bandwagon or listen to some evil scum of the earth newsletter writer who says he's going to buy the all-time high, right? If you did that in 2011 and you bought gold at the very top in 2011, you would have more than double your money now. Okay, it took 14 years, but it happened, right? So like if you pull back and look at the big picture, if that's your basis for action, I really don't think you have all that much to worry about. And of course, almost nobody top ticks a market. Most people have done better. And if people had courage of their convictions and they bought the slumps, they bought down in 2015 near the bottom, then they would have made much, much more than just double their money. So, the good news here, I think, is that for hard money advocates, what's going on in the real world out there, and if you're patient, you stay the trades, you buy low, sell high, you can do that repeatedly and make a bunch of money. If you're not in the money-making phase of your life, you're in the wealth preservation phase of your life, then, don't lose the faith, brothers and sisters. Your real money is what it is, and we all know, whatever the Fed may or may not do, those 25 basis points or not, that's not even icing on the cake. That's just superfluous almost. Small-time noise.
And you're calling for copper to be really your favorite play in 2026. Can you expand on this?
Yes. When I make that call, people ask, what do you like best? What's your favorite bet for the coming year? And it's become sort of a tradition. And I've made it copper again. When I say that, that's not to say I think that's the one that's going to go up the most. I'm looking at, the answer is risk adjusted. It's the one that I have the greatest confidence in, the most solid bet. And it's more specifically, the real question is, Lobo, where are you going to deploy your money? I was already long gold and silver, so I didn't miss out on this year, but I was looking to deploy more into copper, and I did some, but I've been waiting for a buying opportunity. I do think there's still some Trump shock to go here, and there's still a chance of a buying opportunity. But if not, my outlook on copper remains so bullish for so long, I'll just add more copper to my portfolio. So the answer to your question is, like, if we get the blow off top soon and gold and silver go into reverse, they're not going to have a great 2026. If we are building that plateau, if this is the next shoulder before the next head in the chart, then gold and silver will both outperform copper. I have no doubt about that. That if but that's an if statement, not a when statement, right? A Rick Ruleism, never confuse, if and when. So whereas copper, I see that more as a when. The pushback here I get is, nobody wants electric cars anymore, so that's going to make copper demand go away. No, it's not. It's Dr. Copper. It's a fundamental industrial metal. And sure, extra demand from EVs it helps copper, but that's not the basis of the speculation here or the market, really. And people say the same thing about AI. Oh, the AI bubble is going to blow up. That's going to be bad for copper. Well, probably short term it would. And that could be the very thing that gives me the buying opportunity that I've been hoping for if that AI bubble bursts. Because it's certainly, and actually this you didn't ask, but this also applies to uranium. Both uranium and copper, and maybe even to some degree silver, have become AI plays, and that could blow up. That doesn't change the overall fundamentals for any of those metals. But if the AI bubble does blow up, it would almost certainly be bad news for anything that's gotten an extra tailwind from that AI play right now. So, all of these things could happen or not. But at the end of the day, you still have to have copper. You're still going to wire houses with it. You're still going to need it to wind motors. You still need it for all the gazillion other things that you need copper for. And that's not going away while the supply remains constrained. So I'm looking at it from, like, as a miner, right? The supply and demand of the market. And so I just have a really high level of confidence in copper going forward, whatever the short-term volatility of the markets does. Whereas, as much as I love gold and silver, if we get that blow off top, things could reverse sharply.
What Lobo ultimately delivers in this section is clarity. Volatility is not the enemy. Context is. A pullback to $50 silver is not a crisis. It's the cost of admission in a bull market driven by monetary debasement, geopolitical risk, and structural deficits that cannot be solved with policy tweaks. Even at $50, miners remain wildly profitable, balance sheets stay strong, and the long-term trajectory remains intact. In fact, a correction would reset sentiment, reprice quality mining stocks, and create the kind of asymmetric setups that only appear once a decade. But if the opposite happens, if silver goes vertical, gold confirms, and markets start behaving like the late stages of 1979 or the final weeks of 2011, then the bull market may be entering its terminal acceleration phase. And as Lobo emphasizes, that is both opportunity and warning. Parabolic moves create fortunes, but they also mark the countdown to the next bear cycle. Serious investors must be prepared for both outcomes. Zooming out, the long arc of this market still bends in one direction. Governments continue to monetize debt. Inflation is quietly becoming structural. Nations are rearming. Supply chains are fragmenting. Financial plumbing, from the treasury market to physical metals delivery, is showing signs of strain. And in that environment, real assets with no counterparty risk rise to the top. If gold is the monetary anchor, silver is the leveraged bet on the world waking up to that reality. For investors in the preservation stage of life, Lobo's advice is simple. Stay patient, accumulate on dips, and don't let short-term volatility shake long-term conviction. For those still in the wealth-building stage, the message is equally clear. Corrections are gifts, blow-off tops are opportunities, and both require discipline rather than emotion. The story of this cycle hasn't been written yet, but if Lobo is right, and if the fundamental drivers remain unchallenged, the real move may still be ahead of us. And that means the most important decisions investors make will happen before the headlines catch up, not after. If you found Lobo Tigre's insights valuable and want more content that cuts through hype and focuses on actionable analysis, please like this video, subscribe to the channel, and share it with other investors. And leave a comment below telling us your outlook for silver and what you believe the next major catalyst will be. Thank you for watching, and we'll see you in the next video.